Thanks so much, Jeremy. It was a great preview of a lot of things I'm going to talk about, and really happy to be here. A lot of leaders across industry and government, and it's great that we're going to get together and work on this issue because it's a high priority, certainly for FinCEN, and as you said, it made even more clear in the recent circumstances. So thank you to you. Thanks to the Better Identity Coalition and the FIDO Alliance and the Identity Theft Resource Center for inviting me and FinCEN to take part in the forum. It's really important to bring public and private sector minds together like this to collaborate on the future of identity and related innovation. I view identity as a national security issue, and it will take the intellectual power and creativity of all of us to figure out how to secure identities and keep people from harm, much as you noticed in the beginning. So I'd like to cover four things today. First, the critical role identity plays in an increasingly digital economy, as you noted. Second, FinCEN's role in the identity ecosystem. Third, ways we're seeing identity exploited in financial crime. And then fourth, what we hope to advance through greater coordination with everybody here. And before I go further, I should also note that the views I share today are my own and not necessarily official FinCEN or Treasury policy. So with that said, let's jump into digital services and identity. The future, and indeed much of the present of payments and financial services, lies in the digital world. The digital platforms, as you noted, enable immediate interactions with business partners, consumers, and loved ones with the tap of a finger. And the pandemic has only accelerated this transition, with many businesses shifting largely to remote operation and customer interfaces. Digital payments can help provide transparency to governments and financial institutions to help us detect illicit actors and trace financial flows. Digital services of all kinds also have the potential to enhance inclusion, including through access to services for populations that face challenges interacting in person, especially in times like this under COVID and just living in areas with limited accessibility. Digital payments can help countries disseminate financial benefits to large populations very quickly, and we've seen how that sort of speed and traceability is really important in the context of the economic relief during the COVID pandemic. However, the digital migration also brings certain new and enhanced risks when accompanying security and integrity solutions are not implemented and scaled at the same time. Faster payments for legitimate users can mean faster exploitation by criminals and fraudsters. And we've seen how billions of dollars of fraud involving COVID relief programs have exposed weaknesses in current identity and payment systems. These force us to take a really hard look at how identity is managed, verified, and authenticated. The development and adoption of digital identity solutions is a key factor to help prevent fraud and financial crime in these digital ecosystems. And to get payments right, we have to get identity right. And we have to do it in a way that preserves privacy while ensuring integrity in the system so that the people who need the financial assistance are getting it. And before I go further, I'll just give some context to how FinCEN is relevant to identity issues. We have two roles in the financial sector, and both of them involve identity. First, as the administrator of the Bank Secrecy Act, FinCEN regulates anti-money laundering, or AML, across US financial institutions. And identity sits at the very heart of any effective AML program because the ability to detect and address risks is only as good as the ability to determine with whom you're engaging. Understanding the nature of your counterparty risk can also mean needing to consider multiple aspects of identity. Could be legal identity, but it could also be activity-based attributes or indicators like reputation or your digital footprint. So the real question for identity-related risk is, do you have the information necessary to reliably assess the risk of your counterparty or your customer? And that question is not just an AML compliance issue, it's also reputation and business risk broadly. In our second role, FinCEN is the financial intelligence unit of the United States. So we work with over 160 international partners, as well as thousands of domestic regulatory and law enforcement stakeholders to identify and investigate illicit actors exploiting the financial system. This includes analyzing emerging risk indicators and trends across the reporting that we receive from financial institutions and returning aggregated insights to the public in the form of advisories and alerts. In this FIU role, putting together the various aspects of identity is critical to revealing threat actors seeking to harm and take advantage of our families, neighbors, and our businesses. we're seeing criminals increasingly exploit vulnerabilities in the identity systems to commit fraud, cybercrime, and other illicit activities. So I'll give a few examples of these evolving threats that we're seeing exploiting identity and financial crime. First, we're seeing identity proofing and verification compromise at the account opening stage. In our July 2020 COVID-19 cybercrime advisory, we highlighted that criminals are undermining identity verification processes through identity theft and synthetic identity fraud. We're also seeing the manipulation of digital images to undermine remote KYC or know your customer checks, whether through Photoshop or more sophisticated deep fake technologies. And around the same time as our FinCEN advisory on COVID crime, the Federal Reserve published a report on synthetic identity fraud that cited costs of at least $6 billion to US lenders and 20% of credit losses just in 2016. In light of many financial institutions' obligations to verify the identity of their customers, these figures are staggering. We have to improve detection and prevention of identity fraud. Second, we're seeing a lot of identity authentication compromise leading to account takeovers. A lack of multi-factor and multi-step authentication is too prevalent across the financial sector. FinCEN is seeing around 5,000 account takeover reports each month, reaching approximately $400 million per month in the last 2 months. With billions of compromised credentials exposed online, there's a high likelihood that many users of the US financial system have had some legacy information compromised at some point. Criminals are using exposed usernames and passwords in credential stuffing attacks and other takeovers. Reporting of more sophisticated methods of account takeovers, such as those targeting multi-step and multi-factor authentication methods by compromising authentication applications and SIM swapping, have increased significantly from 2016 through 2020. We've also seen continued reporting of criminals exploiting single sign-on and account aggregator services to facilitate takeovers across many accounts. Although FinCEN observes increasing sophistication in some of these account takeovers, single-factor authentication exploits through the use of compromised passwords and security questions still account for the vast majority of account takeovers in the SAR filings we're seeing. The bottom line is that many account takeovers and fraud are occurring because of failures to enforce stronger levels of assurance in identity verification and authentication processes. As we highlighted in our COVID-19 cyber advisory, FinCEN encourages financial institutions and service providers to consider specific NIST digital identity standard as they build out their identity proofing and authentication processes. For those that are curious, by the way, that's NIST Special Publication 863-3. However, we still receive too limited detail in many account takeover reports about how they happened. The more data we receive, the better the picture of how industry is seeing authentication compromise targeting their sector. And we emphasized in our 2019 updated business email compromise advisory that we really need financial institutions to flag in their suspicious activity reporting the nature of the authentication mechanism that's being compromised in activity like this, such as account takeovers, because only from hearing how you are seeing this mechanism compromised can we track this evolving landscape of identity targeting criminals. And only with that information can we relay back to you the aggregated threat advisories and alerts. Third, COVID-related crime is often targeting identity. From February to December of 2020, FinCEN received more than 167,000 suspicious activity reports, or SARs, on a variety of activities with a COVID-19 nexus, many of which involve compromising identity and trust between counterparties. We've seen significant fraud against government relief programs involving unemployment insurance, economic impact payments, and small business lending programs. Often this fraud is accomplished using stolen identities, and financial institutions recognize the fraud because the identity of the supposed recipient does not match that of the bank account holder. Such criminal activity may also involve business email compromise, as I mentioned earlier, imposter frauds such as fraudsters pretending to be government employees or offering assistance in securing government funds, and then witting or unwitting money mules. The money mules might be recruited by scammers using synthetic identities created in social media, such as pretending to be a US person living abroad who's needing money to return home. In response, FinCEN has worked in several ways, including training law enforcement on emerging methodologies and issuing alerts and advisories with risk indicators to banks. While these immediate measures can help, broader work securing identity systems will pay much bigger dividends over the long run in combating any kind of fraud, including pandemic-related fraud. So, looking forward, what is the road ahead and what do we do about these evolving threats? FinCEN is surging efforts on the identity space across the spectrum. We're focusing on financial intelligence analytical efforts on identity-based illicit activity and working to issue advisories identifying threat trends and indicators as we've done in the COVID space. We're also engaging with government and industry to hear your thoughts on what we can do better to combat identity-related financial crime and to encourage development of innovative identity solutions. Through our Innovation Hours program, we're engaging with identity innovators to learn and issue spot together to advance effective innovation. In fact, many of the provisions of the AML Act in the NDAA codify FinCEN's existing efforts in innovation and empower FinCEN to continue to take steps supporting such innovation initiatives, especially knowing that Congress explicitly endorses our work and presumably will fund it. We're also leaning forward with the interagency community to examine government-provided identity services and identify opportunities for enhancing shared services. We want to better secure identity in ways that can increase trust in identity information collected by financial institutions to combat financial crime. We do recognize that identity proofing, verification, and authentication are challenging, especially with so many disparate owners and models for identity attributes and credentials. There may be opportunities to better disrupt fraud through creation and expansion of secure identity attribute validation services. For instance, what the Social Security Administration is working under the electronic consent-based Social Security number verification initiative. We're working more and more with these law enforcement and regulator partners, as well as agencies charged with managing identity services like the IRS, State Department, Social Security, and Postal Service, to explore ways of leveraging identity services across the US government to combat fraud and support institutions' ability to operate with effective integrity. Speaking of shared services, some of the biggest news in the AML space recently has been the passage of the AML Act under the National Defense Authorization Act, including the requirement for FinCEN to develop and maintain a groundbreaking database and verification service for beneficial ownership information that can benefit law enforcement and financial institutions. The fear of having hidden assets exposed is a powerful disincentive for corrupt leaders and other bad actors to establish shell companies and financial accounts in countries requiring reporting of beneficial ownership. It'll be harder and more costly for criminals to hide their activity when beneficial ownership information is readily available and more accessible to law enforcement. With this information, law enforcement can better trace the flow of proceeds, identify ultimate beneficiaries, connect the dots between names, entities, and addresses and other relevant information, and simply investigate and prosecute crimes more efficiently and effectively as we seek to hold criminals accountable and repatriate funds to the victims. While such information is critical to identify and disrupt illicit activity across our financial system, it is also extremely sensitive information, and it implicates significant policy, technological, and analytic efforts to execute properly. This effort expands FinCEN's equities in identity to no longer just being a consumer and a regulator of identity, but also now a provider of identity with alphanumeric FinCEN identifier for beneficial owners and the authority to disclose beneficial ownership information to financial institutions to support their compliance with customer due diligence obligations. Many of the other agencies here today and related service providers have extensive experience in this area. So we need your expertise, solutions, and lessons learned to help us build our regulations and services as effectively as possible. FinCEN is also looking at regulatory advances in this space. We're working with regulatory and industry partners, such as through the BSA Advisory Group, FinTech, RegTech Working Group, to evaluate the efficacy of AML regulations related to identity, and if there are adjustments or points of clarification that will help promote the development and use of strong identity solutions across the financial sector. We want to know what changes or guidances you would like to see. Is there acceptive relief for an innovative pilot program that would support industry use of a particular solution? While we aim for a technology neutral regulatory framework, is there a regulatory language that inhibits the use of emerging technologies in the course of your due diligence processes? Please engage us and give us feedback. AML is a living framework and we welcome input to improve it. And lastly, we work with our government partners, both financial and non-financial regulators, to share lessons learned across the various sectors. So to close, identity systems need to evolve along with the threats. We can work together to foster the development of infrastructure, information sharing, and standards that will safeguard the future of identity. But we need to coordinate much more closely on vulnerabilities and benefit from each other's information and experience in privacy preserving and secure ways. There's a lot of good work to be done, so very grateful to be at this forum with you all, providing an important convening function, but also including us in the conversation. Thank you.
Hey, thanks, Michael. I really appreciate you kicking us off with such a great, opening keynote to provide a lot of food for thought in terms of what we should be talking about the next couple of days. I've got time for just a couple questions before the next panel, if you're willing to take them. We've had a bunch come in for Q&A. I'll just pick a couple. One was somebody asking, you mentioned you're trying to point banks toward the NIST standards. Somebody said, do you perceive the standards moving from guidance to law or regulatory oversight by FinCEN or another agency? Basically, would it shift from a recommendation to consult to something that would be required?
Yeah, that's a great question. I will not forecast law. I think the point in this space is to keep it advancing. So I'd be surprised to get that intense about it. But what could happen is, as we're developing the guidance and the risk base and what's reasonably risk based, that clarification, could get more specific, so that in exams and enforcement actions, you'd see something like that. But the point is, I think is clarity.
I think a good point to make too is, NIST is currently doing Rev 4 on their special publication 863, in part because threats constantly evolving and the technologies we use to guard against threat are evolving. And NIST every few years has to do a bit of a catch up. And so I think a lot of banks have pointed out it's helpful guidance to look at, but you don't also want to preclude them from innovating just because something's not listed in, say, a 3-year-old special pub.
Yeah, I think we're all going to keep evolving so fast. It's going to be hard to put stuff on paper, and it's going to be more of a dialogue.
Yeah. Second question was if FinCEN's taken any position on the use of decentralized identities.
We are resolutely technology neutral. So very much just encouraging innovation and coming in and talking to us about what works. But it's really about what works and effectiveness, not a format.
Got it. And the third question was wondering if you've been working with the folks at GSA from login.gov. I know we'll have Phil Lamb speaking a little later today regarding any lessons learned around what it takes to do high assurance identity proofing or issuing authenticators.
Yeah, absolutely. Working with GSA, SSA, state, all the way across. In fact, was just on a call with Phil the other day. So yeah.
Excellent. Good to know. All right. Well, I really appreciate you taking time today. You got us kicked off on a great note. We'll take about a 3-minute break and then come back with Eva and James from ITRC to talk a little bit about some of what they've been seeing from the ID Theft Resource Center over the last year. So Michael, thanks again and look forward to working more with you.
Likewise. Thank you.
And we'll be back after a short break.